Good evening, everybody. My name is Technical Indicator from iHub's Penny Stock Express. You can watch this video in high definition. Just expand and select 720p in your YouTube settings. I'm going to do a brief tutorial on Williams %R this evening. It's an indicator, a very popular one, predicting oversold and overbought readings. I'm using a 14-day setting. The current status on the Williams %R is -65. So how do we come up with the math on Williams %R? Well, that's pretty simple. Basically what we're looking at, the highest high over 14 days minus the close divided by the highest high over 14 days minus the lowest low. All right, and then you multiply it by -100. So to be very, very quick with this, 144 is your highest high. Your close is 131. Your lowest low is 124 from Friday. So your math is your highest high 144 minus your close 131 gives you 13 cents. Divided by your highest high 144 minus your lowest low 124 over 14 days, which is 20 cents. All right, you simply divide that. 13 divided by 20 gives you 0.65 times -100 gives you -65. Voila, there's your reading. So it's a mouthful, but it's really not a hard mathematical problem, and it's good to know and understand what's going on in your formulas when you're trading stocks. In my opinion, anyways, the more you know, the better off you are. So what does it do? Well, as I said before, it's popular for measuring overbought and oversold levels. Okay, getting ahead of myself there. I apologize. Slow down. Scale ranges from 0 to -100. So 0 being here, -100 being here. 0 to -20 is overbought, as you can see through here in the green. -80 to -100 is oversold, as you can see through here. So a lot like the RSI, right? Okay, so it's an oscillator, we know that. It's important to remember that overbought does not necessarily imply time to sell, and oversold does not necessarily imply time to buy. All right, a security can be in a downtrend, become oversold, and remain oversold as the price continues to trend lower. Once the stock becomes overbought or oversold, you should be waiting for a signal that the price reversal has occurred or will occur. Okay, so you're looking for signals on your chart. The way I do that, for me, it's price action and volume. That's my number one, man. I'm always looking at price action and volume. Then we get into RSI, MACD, and then the Williams %R. So I never really use the Williams %R as a standalone. Then I'm into the OBV. So anytime I find a reading I like on the Williams %R, I'm looking for other things to confirm that my reading is accurate. All right. Price reversal confirmation can also be accomplished by other indicators and aspects of technical analysis. All right. If you have them, I don't know what you use or how you use it, but these are the things I use. So that's all I can talk about right now. If you have any simple requests, drop them in on my board, and I'll do the best to answer those when I can. All right. So I talked about earlier. Oversold for a period of time does not necessarily mean buy. And you can see that with the RSI here because the RSI hasn't broke the 50 line. All right, so it's trending sideways, but it's not breaking the 50 line. When it does break the 50 line, that's your buy signal. All right, and we also break, voila, the -50 line. So look how nice this sets up for us right here. So even if you waited a day or two to react, you still got some good price action on Siri at 105. And if you were able to trade all the way up into the 144 range, which should have been possible because there were no major concerns with the RSI. Yeah, the MACD was toppy, but it hadn't turned down yet. There was good separation all the way through here. And your Williams %R held overbought quite nicely. It never broke that 50 line until here. So you would have sold your position right here and taken your profit from 105 all the way around 135. So that's 30 cents on the stock. That's not terrible, okay? And that's just an estimation. I don't know exactly where it would have been. All right. Basically, that's how you use the Williams %R. Oversold, overbought, find something else that confirms that the oversold status is solid and it could be reversing, such as the overall trend is up, so buy on dips. If it's a downtrend, you might be using the Williams %R to do a buy signal on a short. Okay, so this could be a short opportunity here. So it depends on what the overall trend is on the stock. In this case, the overall trend is up, so we're using the Williams %R to buy and add on dips. Again, my name is Technical Indicator from iHub's Penny Stock Express. I hope that you've enjoyed this stock video chart. It's a pretty simple indicator to use. I can't really think of anything else that I can include in this Williams %R video. I mean, it's pretty basic. All I can really say is just take a look at these centerline crossovers, look at the price action prior to that, up and through here, and then really go from there. Again, here we're making a series of higher lows, 56 to 65. Higher highs, 61, 70, 74, okay? So again, when you got this false reading, there was no real reason to sell. I mean, take a look at that stuff. See how it correlates. Obviously, hindsight is 20/20, so tutorials are very easy to do. But if you can learn what's happened in the past, and you can identify a trend, which in this case is an uptrend, you can hopefully predict what's going to happen in the future, and the indicators can support and make you feel better or more confident about your buys and sells. Remember, knowledge is power, and having a game plan before you enter a stock is always a good idea. Know where you intend to buy, and know where you intend to sell, and also know that if things go sour, have a manual stop loss put in place so that you can save your money and get on to the next trade. Alright, I'm over at the Penny Stock Express. If you liked this tutorial, please come on by, subscribe to my site. I'll be doing more tutorials just like this one in the near future. Have a good trading session tomorrow, everybody. I'll talk to you soon.